Hey, hello friends, this is Martin from CKH, the channel for learning about trading and investing. Welcome to Markets. Next week, the weekly stock market analysis show, where we look at the technical charts and then try to understand what happened in the market during the previous week. And also, we plan for a better trading week that started from tomorrow, Monday, June 30th, 2025. So let's move ahead. So here we have the Nifty 50 charts that you're seeing, the weekly on the left and right side, we have the daily one. Look at that candle. Solid bullish candle, and look at the pattern. It has come to the bottom of the trendline channel and then heading towards the top of that once again. The daily time frame, the shorter time frames, you see a breakout from another parallel channel, clearly visible there. Similarly, Banknifty presenting wedge top once again hit, and the daily chart shows once again Banknifty daily charts trendline channel is where the price is at exactly, and it's at all-time highs. All-time highs Banknifty, and breaking out towards the all-time high Nifty is what you see here. That's a bird's eye view. So what exactly happened is a 2% move, 523 points up in the Nifty. That's a kind of rally. It literally broke out and rallied throughout the week, and it was close about obviously about the 20 expansion moving average. And Banknifty also broke out and rallied. Banknifty has already hit very recently the all-time high, and last week once again new all-time high is created, and it was a 2% plus. That's 2.1%, 2.11 to be precise. 1,186 points of move up in just a single week. Previous week also it is more than 1% move. So that's the kind of move that we had. Remember, we had a 70.3% of rally on the Nifty, and 12.5% of correction is all that happened. I'm sorry, 70.23% of correction in the rally, and 12.45% in the case of Banknifty. That's the correction that has happened, and that's what we're stuck the last few months, probably 3 months or so. And remarkably, it has recovered almost all of that just by last week's big breakout. That's where we are. Let's analyze and see what are the candlesticks of the weekly candlestick. Look at this. This is super bullish, absolutely bullish candle. Same with Banknifty also, absolutely bullish candle and new all-time highs. So nothing much to talk about that. It was forming, some consolidation was happening since last several weeks, and then finally the breakout happened this week. Banknifty has already done the breakout several weeks back, but Nifty was lagging behind, and then the consolidation ended once the Israel issue got into a ceasefire. And it's at all-time high Banknifty, and Nifty is heading towards that. Absolute bullish candlesticks on the weekly and daily. If you see the last 5 days move, this is what happened. Every single day it is trying to move up and close higher. Right, absolute rally. Same with Banknifty also, higher, closing higher every single day after a gap up move on the Monday. That's what it is. Bullish candles on weekly and everywhere bullish candles, and as this broke out rallied all-time highs we already speaking. Now Bollinger Bands is also giving a bullish outlook for the next days, because you can see that the Bollinger Band upper band is expanding, and you see what is known as the price is moving, walking on the bands. That's absolutely bullish, super bullish you can say, and definitely it is above the median, so no doubt on the bullishness. And doing the same, the bands are expanding upside, and price is walking on the bands of the Bollinger. So Bollinger Bands are simply saying that it's all upside only, no doubt. Candlestick is saying the same. And what does momentum say? Momentum is what you see downside here. The RSI is what is used there, and the weekly is what you see on the left side, and daily is what you see on the right side. So momentum is clearly above the RSI 60, means it's bullish. Sometimes it's known as overbought, but the overbought can go and stay there for a long period of time, long period of time. So anytime it's above the RSI 60, it's considered bullish, and it's on the medium term, and the daily also it is bullish on both time frames on both the indices. So no doubt about the bullishness. What about ADX? ADX is a trend indicator. The trend indicator is also bullish on all time frames on both indices, and it all are having trend which is upside. So strong trended, strong momentum based rally is what the charts are shouting at us, right? For the moving volatility. We understood a little bit of volatility using the Bollinger Bands earlier. Now another way of understanding the volatility is, and another means the best way of understanding the volatility is the India VIX. So in spite of the war that is happening, you could see that the VIX was not spiking up as much as it was expected. It was cooling down during the Iran conflict, Iran-Israel conflict. It was actually cooling down. This market probably has more intelligence collectively. And it finally, after the peace talk has happened, it decisively crashed down, nearly 20% the last 2 weeks alone. So this last week it was at nearly 9%, 10% fall. So its VIX is at less than 13, 12.4. That's low volatility regime, and that's what it is. So the fear is the fear factor is cooled down clearly. So that's the reason why the market is moving up. So that's a big plus for the bulls. The next analysis that we're doing is that of the open interest. So what we see here in the Nifty futures, open interest is showing on Friday it was a short covering. This where the price moves up and then the open interest falls down. So it's covering, people are covering the shorts and going long. So it's big short covering. So it is not as, sometimes it can be very powerful, but it may not sometimes sustain for multiple days unless it turns to a long build up in the later days. We'll have to see on Monday if short covering is turning to a long build up or not. So that's what futures are showing for the July 3rd weekly expiry on the Nifty and July 31st Banknifty. Also, the put call ratio PZR is 1.21 plus 1.1 on the case of Bank. So it's absolutely bullish. There's a mistake here. We just correct it right away. So it is bullish. Last week it was bearish. So that's what open interest is also showing. Open interest for the futures and YI, PCR all are showing bullishness ahead. And the chart that you see here is showing the highest put writing zones and the highest call writing zones. That would be the place where the supports and the resistances can be understood, right? Based on that, the chart is displayed here. So highest put and call writing is seen at 25,000 and 26,000 is where the resistance is there. So call writing at 26,000 highest, put writing. So biggest support is at 25,000. So market is way ahead of that, heading towards the 25,700. The 700 points of comfort cushion is there for the market to, even if it pulls back. That's a comfort that it has. As of now, we have 4 more days for the expiry. Weekly expiry we are talking about, and for 25,500 is where the second highest put writing is there, and 26,000 again ends up to be the second highest call writing. Right, so that's where the weekly expiries are showing short term. And Banknifty's monthly expiry does not give you a clear picture because the month is just beginning. 56,000 is again the place where the condition is there. That's why the highest bet on put and call writing. Support so seen that 56. So holding the 56 is as important as holding the 25,000 for the Nifty. So second highest put and call writing is seen at 57,000, another 1,000 points far away. So Banknifty is already above 57,000 actually as of now. It is closed above 57,000, but it's a monthly view. The monthly speculation is what we are talking about on the options. So that's the levels. One way of finding where the support and resistance are as of now is this, using the options call writing and put writing. Try to understand that. That's one way. Another way is to look at the chart and then understand those price levels based on the technical elements. So here you see that the Nifty charts, it is breaking out, and the first resistance now would be the gap that's coming at 25,740 nearby. So if that is cleared, you have an 850s level, 25,850, where there is a previous resistance is there. That is also taken out. Next week place will be 26,000 rounding number, and after that it will be 26,277. So that's where the all-time highs are there. So it's very less than 500 points, less than 400 points actually, but there's going to be hurdles to clear that before we reach there. There will be strong selling, profit booking that will happen at the zones near this technical 11. So we'll have to see whether Monday is going to be a gap up, which will cover all these, or would it now that it has rallied ferociously, it may pull back and then book some profit, and then once again it may slowly move up. Anything could happen. There's no way that we know that. The only factor that we can anticipate due to a short covering, actually that has happened. People has to go into long build up for the Monday for the move to really sustain. But what a ferocious rally of nearly 7.5%, just 3 months, and the two wars, the war between India and Pakistan, Israel and Iran, all that happened in this rally. Despite the rally, all this happened. That's miraculous, and that shows the resilient markets that we're talking about in Indian markets. Banknifty, similarly, the resistances, and it's little difficult to find because it is already at the all-time highs, and sky is the limit. We can find some levels based on the Fibonacci extension levels. I'm not put in there, but I would need to see a daily green candle close above that trend line consistently before I would do that. But sky is the limit; it can go anywhere right from here because it's already at all-time highs. So first resistance would be rounding numbers. That's what you can look at, 58,000. Then Fibonacci extension. I'm not drawn that, but you can get some. I will publish that in my X later. Now, supports can be seen as the exponential moving average zones with daily exponential 20s, 50s, even previous areas from where the breakout happened. That zones will be support zones. So that will be based on that the levels are put in here. So for the Nifty, first major hurdle will be the gap, which it may or may not take. I don't know. Monday only will tell that. Probably Monday's Nifty, Gift Nifty will give you a clue whether it's going to take out that or not. That is taken out. Next major hurdle would be the 25,850, which is the previous high. Last time when it hit the all-time high, that's where it paused, and that will again act as resistance now. 26,000 rounding number is taken out, then all-time high has maybe what it is heading towards. But will that happen before its next weekly expiry is not? We don't know. Support downside, 25,200 is a previous swing low. We've already seen that. So we're talking about the zone. So it could come here back and take a support, and there's a change in polarity concept coming here, and then from here it may bounce up. That is, does not happen consistently at one shot vertically. It always takes a breather. It pulls back, books profit, and then it once again takes a strength for new buyers. That's how it is. So that's where the supports are there. 25K would be a major support. 24,630, 24,474, 24,355, 24,253, 24,164, and 24K. RN is rounding number. GAP gap. Gamma is daily exponential moving average. Fib is Fibonacci levels. PSL is previous swing lows. PSH will be previous swing highs, and ATH is all-time highs. RN, PSH, previous swing highs. So Banknifty similarly, if you look at, already told. First resistance is 58K. Because it's a rounding number, and then sky's the limit. Support 57K, 56K, 55K. That's what. Then exponential moving averages comes in between. There also market could find some supports. So that's all mentioned here. So pause, reverse back the video, and then look at your charts and then take your own decisions on where we are talking about probabilities where the market may pause, or probabilities where market may find resistance, or probabilities where market may pull back and find support. Let's move it. We'll try to understand the different sectorial indices, the major ones, the 6 of them. So that sectorial indices would give us a clue on how the market movement is happening, which sector, which industrial sectors is where the movement is happening. So last week, if you see, IT did not do well. Neither did FMCG, neither did reality. So reality, FMCG and IT actually did not do well. Reality in fact went 2% down, and IT went 0.5% down, actually speaking. So what moved the market last week is the metal, auto and the pharma. What did extremely well was metal, which did nearly 5% of move, while pharma and auto did 1.5% of moves. So none of them are good enough to take long positions as such, because both time frames is not having a momentum in the bull zones yet. So that's a picture. As this charts, you'll understand what I'm talking about. Nifty's in the sideways and then trying to recover and climb. Long way to go there with respect to the momentum. And metals are still in the mid of that parallel channel, still sideways and trying to climb below the bull zones. Auto sideways and attempting to climb still below the median of that parallel channel. And the pharma is also doing the same, sideways and rising up. FMCG sideways and rising up. And reality also facing some resistance at the place where it is supposed to have settled above the bull zones, which didn't happen. So it is sustaining the sideways, and it is not falling down. It is in the sideways, but not at bullish. It is trying to go there. Is what the mixed picture that we're getting. So In a nutshell, if you do the different sectoral analysis, market across the sectors, we don't see the bullishness yet with respect to the momentum. So we'll have to wait for that on the next week. That's a big thing that we have to understand from this analysis. Now, if you look at the heavyweight stocks, the big stocks that contribute maximum to the Nifty 50 on the Banknifty. So that heavyweight stocks, we're trying to analyze 7 of them, the critic stocks. So the big 3, HDFC Bank, Reliance, and the ICICI Bank. If you see, they have solid candles, absolute bullish patterns, bullish momentum. HDFC Bank, see the breakout above the 2000 after very long time. The volumes is little less, as I talked earlier. So what is it not that big, but absolute bullish momentum, bullish trend, price action, solid bullish candle, and if the breakout happens, you can go big time. Another 500 points move is possible if it sustains. It may take months for that, but that's what it's heading towards, because it's a cup and handle breakout that's happening, and the parallel channel it is worth hit, and long way to go from here for the cup and handle itself. Right, so you can go as high as 3000. Now it's just touching the 2000 levels. So that's what HDFC Bank is. Reliance, also keep in mind HDFC Bank had some dividend X date the other day. That also could be justifying the movement. So you'll have to wait and cautiously watch if the volumes are picking up next week. Now, Reliance Industries is having another solid move towards the top. So you can go as high as 1700 easily. Look at the candlestick, solid bullish, and look at the momentum in the weekly. It's about RSI 60 on the weekly. Medium-term bullishness is coming. ICICI Bank has always been bullish, and this week we have another big solid candle with the positive reverse divergence working out beautifully. Momentum bull zones, trend bull zones, price pattern bullish, and heading towards the top of that trendline channel. Some resistance may come in after another 50 points. Slightly cautious, but absolute bullishness on the medium term. Infi and TCS, they're struggling the sideways a long time, so that's what it is. And Kotak Bank is also trying to break out from that long consolidation, but it's a contrast lag. It doesn't move like that. It moves and then after some time it comes down. So it's always the medium term it is sideways momentum. It's having a sideways momentum throughout long periods of time, but this time the momentum has climbed once again back to the bull zone. So we'll have to see if this Kotak Bank is breaking out from this. Now that HDFC also is catching up, we'll have to see is a contrast stock going to behave as a bullish stock now. We'll have to see that. Kotak Bank. Now, ITC has always been a sideways stock. FMCG sector has not done well. It is flat to move, and same is reflecting the biggest FMCG, that's ITC, and it's sideways. So what is moving the market is three stocks: HDFC Bank, Reliance, and ICICI Bank. Now, apart from analyzing the Nifty indices, let's try to understand the total market indices like the mid cap index and the small cap index. Look at the candle. This is a range shift of momentum that you're seeing there concept. Check out the playlist for more details, but range shift is extremely bullish. Candlestick is absolute bullish, wide range bullish candle. Wide range bullish candle in the small cap is also range shift seen in the momentum on small cap also. So both the markets are doing perfectly well, heading towards all-time high is what we see for the broader market. So the rally is not just for few stocks, it is across the different sectors and across the broader market. Buying is what is happening, which gives more confidence for the bulls, obviously. Now, institutional participation has turned to be biased for the last week, and this week also. One particular day you see that it was heavy buying, and that was on Tuesday. 12,000 crores plus of buying that has happened. After that, some sell off. Monday and Tuesday was a big buying in the FIs, and net to net 4,400 crores of buying is what the FIs have done, and theirs has been buying for ages, and they did the same this time also. 12,388 crores of buying by the domestic institutions. So institutions are in bullish mode, and buying mode is absolutely positive, especially when the FIs have come in the picture after a long period of lullness. Now, derivative side, the FIs India is net longs are moved up actually, so they are bullish on derivatives as well. Now it's time to analyze the global markets and global commodities as well, like the crude and the gold. Global markets in the sense the US markets primarily. So currencies, coming to the currencies, the global goods, let me just tell upfront, global clues are absolutely great for our market, for Indian market I mean. Dollar index has 1.54% of downfall. Last week it's at 97.25. The dollar weakening would be great for emerging markets like ours. And look at this. Along with that, the USD or the currency pair is 1.3% down. That's 85.43. Then 1.3% down, and the dollar. That means that rupee has strengthened, but still it remains a week above 85. But this substantially gained with a 1.3% fall in the last week, along with the dollar index. The currency has strengthened, which is positive again for the Indian stock market. Look at crude oil, 12.4% of fall. 12.4% crude oil. These are charts. Look at that. It is in the war edge. People thought a breakout would happen, and then dollar will go to 120, 30. There was predictions by several analysts, and now the war and the ceasefire is coming, and then it is reversing back from the 77 level. It's back to $65 a barrel for the crude oil. So that's a big plus for. May not be good for oil marketing companies, but big plus for the economy as such, and an oil important country like ours. It's a big positive global Q. Now look at gold. Gold is also falling down. How much it is falling down? It's 2.8% of gold. So gold is consolidating or retracing or pulling back after a rally of 120% or something. So gold is falling and the market is rising up. It's fine, but that shows that people are investing money from the gold back to the equity, so it's a good thing. But gold falling too much is not bad, but right now it is just slipping sideways, you can see on the medium term on gold charts, like you see. So that is also positive in a way. If you look, like it may be an indication that the price may become, the money may be falling back to the equity market from the gold that way. But as a hedging instrument, it may not have much use when the market is rising up. Gold as a hedge does not matter. So that is also positive. Now look at US markets, Dow Jones, S&P 500, Nasdaq, all are green and heading towards all-time highs. Bullish momentum, bullish trend. Like all-time highs, Nasdaq and S&P 500 is an all-time highs. Dow Jones very close to the all-time highs. That's a little bit of research indicates that dollar index, the dollar value has decreased, right? And the bond value, bond yield also has decreased, which and on the contrary, the stock markets in the US are rising up. US bond by the stock report and US dollar index is what you're talking about. So that there is a lot of fundamental indications, but overall that is giving us, the research says that gives a cautiously bullish outlook on US markets. US market is a mother market, so always US market is closing in green with 3.8%, 4.2 Nasdaq, 3.8% Dow Jones, and S&P 500 is 3.5. So nearly 4% of big breakout move, bullish rising momentum is what we are seeing in the US market, and that's mother market. And US market green is good for us, our markets as well. So every global Q with respect to the currencies, commodities, and the US stock markets, it's absolutely bullish. There's never been such a bullish global Q coming together in a positive way. So that could be an indication that our markets may be further moving up in the coming week. Right, let's move ahead. Let's stop the analysis here and then focus on a little bit of actionables. So two stock picks. Remember, these are not recommendations, this is indication purpose alone. Take I may not or may have taken this, so that doesn't matter. It's your money, your risk management, your understanding, your charts, your study, your risk. So these are not trade recommendations at all. So HBCL weekly charts are showing that there is a possibility of a breakout from this consolidation, which is of rectangular pattern, box pattern, whatever you call, and a rounding pattern. So if that works out, it can give easily 1:2 RiskReward. Volumes are above moving average, good momentum, absolutely above 60 RSI, trend with rising trend strength in the bull zones. What else you need for HPCL is oil marketing company, I would guess. Something to do with oil. Oil has crashed down, so they may be benefiting somewhere. Is why the price may be moving up. Marico is a second stock. It's a FMCG company, and it was in a trend line, and you also see a rounding patterns, a parallel channel inside a parallel channel, a breakout from a rounding pattern, all this. So there is good enough scope for it to further rise and move to give a 1:2 risk reward, because volumes are good, momentum is the bull zones, trend is crossed over to the bull zones. So Marico, FMCG, oil marketing, oil importing, or oil company, oil refinery company, Hindustan Petroleum. This is a refinery company, more of HPCL and Marico. Have stop losses, right? Don't give these candles are big, so don't give a stop loss to the low of that candle, but somewhere in the mid of that candle would give you a initial risk reward, right? Consolidation breakout is very likely in this SPCL especially. I already talked about the factors why. The technical factors already discussed. Now this is FNO, again it's not a recommendation, FNO strategy. This is basically Nifty weekly expiry, Batman strategy, what they call it, selling OTM calls, for OTM calls, and selling inside hedges, that's buying OTM calls and puts, actually both sides, right? So that's the story. So it gives a reasonable give probability of profit. Risk reward is okay, and more important is that it gives a very good range. So as long as the market price remains between the 25,000 and 26,000, things are fine, and it's very likely that it may remain there for the next 4 days, 4 trading days. So if it remains, then we'll pocket in. There is a very high probability that we pocket in 5,000 rupees in our pocket at least, right? And the number of lots depends on your risk appetite, but per lot the possibility more, because it's not completely hedged. If you want, we can have puts and calls bought at the as wings on both the OTM sides, but then your profit will reduce. So it's half hedged, you can say, not fully hedged. Outside hedge is missing, so there is a risk there. If you don't know how to do the adjustments, then exit, take the loss and exit, rather than try to adjust it. If it's not completely hedged, the risk is not fully defined, but there is a probability of 90% and a very good range of 1,000 points. So that's the FNO strategy on the Nifty weekly expiries, Batman strategy. Let's wrap it up. So market broke out and rallied to close positive with plus 2% on both indices, and Banknifty has hit all-time highs. Momentum is turned bullish, trend has turned bullish, and FIs are buying. Remember, we had a 72% rally, and in between we corrected 17% and 12% nearby on indices. That's what has happened, and market has bounced back and then heading further higher. What a brilliant recovery in the last 3 months. So let's try to put over the different parameters technically in favor of the, and fundamentally also in favor of the bulls and the bears, and then try to understand where we stand. So obviously the bulls are, everything is on the bull side, there's hardly anything on the bear side. The bull side, you can see the US markets are bullish, FIs have entered net buyers, India VIX is falling in slow volatility regime. All these are positive in favor of the bulls. Open interest options, open interest futures, both are bullish, trend is bullish, momentum is bullish on both indices. Price about 20 expansion average, where demand is staying, walking on the bands and then expanding on the upside. Heavyweight stocks are doing good, water markets are doing good, sectoral indices are doing good, crude oil is falling, gold is falling, rupee is gaining, dollar is falling. All global cues and technical charts. Price moves, momentum moves, everything is in favor of the bulls. And probably what's not in favor of the bulls is in favor of the bears is the fact that this is a steep rally, a remarkable recovery that has happened. So it may take a breakthrough. That may go on for 1 or 2 days or 3 days or 4 days, and then once again it may can gain the strength to break out the all-time highs in the Nifty, because Nifty is still not cleared the previous all-time highs, right? So there is some resistance that may come in. That's the only factor because of this 700 point kind of moves that happened in the Nifty last week. There may be a pause. Will that pause sustain, survive till the end of the week? We don't know. Probably not. Before that, market may bounce once again. So keep in mind, commodities are great, so our fuel is cooled off. Tariffs give hope with Trump declaring some good deal with India. All these will bring in volatility obviously, but you don't know if things go wrong, market will react accordingly. So you have to have tight slump as well, although everything looks bullish. But everything look bullish, that is when market surprises you. So keep that in mind. No, there is nothing that says it's bearish. That's a time market surprise. Keep that in mind. That's a very, very important thing. Keep in mind. So market means mild bullish. Cautious bullish actually, not mild bullish. That bullishness can be on a week-to-week basis. But I'm cautiously bullish because there is a likelihood that market corrects a little before it gains enough strength to move up. So be careful on that. So cautious bullishness is my view. So next, the levels that I look forward for next week on Nifty and Banknifty is 24,000, 26,000, 56,000, 58,000. Now 26,000 above, if price goes, then you can say the rally has started. But the Banknifty has already climbed about 57,000, so I would say the rally has already started. Continuation of the rally, the next level of the rally has already started with the Banknifty, but for Nifty you'll have to wait for that 26,000 hurdle to be cleared. So as I always say, protect your capital. Risk management is all what trading is all about, not any levels of technical charts, fundamentals, nothing else. In trading, it's all about how well you manage your risk. Market can surprise you, market can screw you, market can take your money just like that if you're not careful. So always have tight stop losses, always hedge your portions, portfolios, everything. The capital is all that you have. And also this hedging using option can be used for makers and rental income as well. Check out the playlist for strategies based for that. That's all I have. If you like the channel, like and subscribe and hit the like button and comment and all that. The feedback's welcome. And if you like to share, please do so. I'm also active on daily technical analysis on Twitter or X. I'm on X and I regularly post analysis on that. If you want, you can subscribe that as well. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.